G'day guys, welcome back to Pete's Investing. It's March 22nd, 2024. This is the Bitcoin analysis. We're including a new trend table in our videos, but in terms of Bitcoin, it's showing a bullish trend in the longer term, but there is a retrace which is still in play. How far will it go? If it's going to continue to the downside, or will it retrace back to the upside? Let's have a look. First off, let's look at the table. This is, I put this in every video now, but I update it daily. So looking at Bitcoin today, and you can see there on the monthly and weekly, we're still in a long trend. And on the daily, it's broken down into a short positioning. Also included, you can see other instruments as well being updated, including some FOREX pairs. So you can see here on our three charts, the weekly, the daily, and the hourly. On the weekly, the ADX 25 is still bullish, likewise the CCI 150, which is above its moving average bands. This indicator, by the way, is in the video link below, so if you want to learn how to trade, chart that on your charts. On the daily, the ADX 25 is showing a bearish movement on the daily, and also you can see the CCI 150 broken below its moving average bands. And then lastly, on the hourly, we've got a bearish movement on the ADX, but notice the CCI 150 is broken inside the band. So if you're trading the lower time frames, like the 5-minute or 10-minute time levels, that you want to avoid taking trades when it's any trade is within that, any CCI 150 is within that moving average band. Zooming out onto each of these first off, on the weekly first off, you can see here we had the breaking new highs, but we did have a couple of bearish divergence back here with the CCI 150, and that's what we use the 150 for, as well as a trend indicator, versus higher highs in the price. It broke down in line with that bearish divergence. On the daily, we've also had a bearish divergence here between those peaks on the CCI versus those recent highs. And you see there the CCI kept falling off, whereas the price kept rising until it eventually fell off as well, and that hit our target at 20. That's a 23 to 38% level, drawing a Fibonacci range between that low and that high. That's where that target, the minimum target range is. And I choose that as a minimum target because, as you can see in this, as an example in this case, it bounced right off that 38% level. Sometimes it goes a lot deeper, but that's why we choose the minimum target range. Now at the moment, there is no divergence there. That price action was moving in line with the CCI, so there's no divergence on the daily. On the hourly, you can see there we had another bearish divergence versus the price, and these are independent from each time frame. So the 1 hour is independent from the daily in terms of divergence, and this also came down and hit our target area. It hit it once there before our last video, but then since then it's actually come down and hit it and bounced off this minus support at 61,250. It's been fluctuating sideways since, after hitting that high at the resistance at 73,660. So will it go higher or will it go lower? Now, we're not projecting anything yet. We need to see it break above that resistance to be more bullish, but at the moment, hold your bullish trades. In terms of a trading idea, stay right to the very end of the video. I've got the trading rules, but what we do here is if we're trading on the lower time frames, we use the daily as a baseline. So if you're trading on the 1 hour, and this is the average down approach for the 1 hour, this is the average down approach for the stop loss approach. So what we do is when the CCI 150 breaks below the moving average band, like it does there, you can see there on the two right charts, that's where we started with the short positioning, the short trades. So you would have gone short from that point, and you'd still be in the trade today. So the average down approach has generated 8,084 just for that little period, versus 1,943 for the stop loss approach. So remember, back here, you would not have taken any trades when that CCI break within that moving average band. You would have taken long trades there, and you might have been exposed to a couple of short trades during that period there. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.